Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Tesla's TSLA shares, and we will also be comparing Tesla to another electric vehicle company. In this video, we will be going over their latest news updates, upcoming catalysts, price targets, and just how high the Tesla share price can actually go this year. We will be analyzing 3 articles, to where the first one is titled, Musk Says Tesla Close to Reaching Vehicle Autonomy. So essentially, Elon Musk is conveying to investors and people who are watching Tesla that they are close to achieving vehicle autonomy, to where the vehicle can literally think for itself. And this is distinct from full self-driving, which we will discuss in this article. After that, we'll move on to another article titled, Cathie Would Watch. ARK buys Zoom, sells Tesla. So we'll be going over the latest buys and sells from Cathie Wood of ARK Invest to determine why exactly she recently just sold Tesla and what we as investors can anticipate going forward for Tesla stock. I will also go over some of the recent buys that Cathie Wood of ARK Invest went into and her comment about Tesla that she recently gave. Lastly, we will compare and contrast Tesla versus Polestar, and according to this author, he drove both electric vehicles and he lists the pros and cons and whether or not they are direct competitors to one another and which one is necessarily better according to his own subjective taste, which should give us as investors more information when we look at and think about the electric vehicle market. So with that being said, go ahead and smash that like button right now because it helps me out a ton. Literally, go ahead, click or tap it right now. Subscribe for more videos like this one. Comment down below where you think Tesla is headed in the future, what you think of Cathie Wood, and if you've ever heard of Polestar. Also, don't forget to become a member of this channel for as little as 99 cents to support me personally because that's what keeps me here on YouTube. However, if you can't afford 99 cents per month, don't worry about it. By subscribing, you're going to get this content for absolutely free. So now let's jump right into today's story. Tesla right now trades at around $264 per share, meaning that it has exceeded my personal price target for the year of 2023, which was originally $250. However, there are more bullish analysts who believe this company could surge as high as $335, which we talked about in a previous video, which is very achievable for this company, while the lower end price targets were increased from $180 up to $194.84, or essentially $195. These are very positive news updates regarding their future price projections, and I believe Tesla is an amazing long-term holding opportunity, especially if you can get this company as cheap as possible. On top of that, recently Elon Musk said that Tesla is close to achieving fully autonomous vehicles. The billionaire said that autonomy is the main driver of their overall market value because it's very apparent that Tesla is overvalued compared to the amount of profits and revenue that they are bringing in right now. But because Tesla is a growth company, we need to value this company based off of their future projections, not their current value, which is why he says that the value of the company is primarily based on the autonomy of their electric vehicles, and this doesn't even include their robo-taxis or their specialization in energy storage and energy generation, insurance, and many other segments that fall under that Tesla umbrella. Now, we've all heard of what's called full self-driving. However, this software does not make a vehicle fully autonomous according to Tesla's own website and according to Elon Musk himself. A Tesla representative even said, these features are designed to become more capable over time. However, the currently enabled features do not make the vehicle autonomous. The currently enabled features require a fully attentive driver who has their hands on the wheel and is prepared to take over at any moment. They go on to say, the autopilot assists the car with steering, acceleration, and braking for other vehicles and pedestrians within its lane. It assists with the most burdensome parts of driving. Therefore, this is not a fully autonomous vehicle that is thinking for itself. Essentially, it's almost there. It's on the precipice of achieving full autonomy and thinking for itself, but as of right now, full self-driving is not autonomy, according to Elon Musk and this Tesla representative, as well as Tesla's own website. That's why Elon Musk is absolutely confident that once fully autonomous vehicles are achieved, that Tesla's share price will absolutely skyrocket. However, he does have one thing to say about artificial intelligence regulation, because he believes that artificial intelligence and AI, as well as machine learning, could get out of of control relatively quickly if we don't think about what we're creating. He says, and I quote, "There is a real danger for digital superintelligence having negative consequences." End quote. And Elon Musk has repeatedly set these types of warnings because we need to be smart and moral and ethical when creating these types of smart electronic systems. Because if we're not careful, it could lead to absolute catastrophe. So Tesla is trying to implement this artificial intelligence into their vehicles to make them fully autonomous, even more than just self-driving. Because even with self-driving right now, you still need to be attentive with your hands on the wheel, and you need to have some cognition of what's going on around you. However, when fully autonomous vehicles come out, you could literally sleep in your car and it will drive you to your destination, which will allow them to create their own taxi service where literally cars will just be able to take you wherever you want through an app that Tesla is creating. But that is further in the future, and that's what Cathie Wood is very bullish on. And speaking of Cathie Wood, let's talk about ARK Invest's recent buys and sells and what Cathie Wood's thoughts are about Tesla and why she has recently sold TSLA stock. Cathie Wood, who is a part of ARK Investment Management or ARK Invest, recently sold and purchased a few high-profile names. For instance, ARK recently bought around 53,958 shares of Zoom Video Communications, and that position is worth around $3.8 million. Now, for me personally, I do not own Zoom, I don't like Zoom, I would much rather invest into Microsoft, which has software that can do everything that Zoom can do. However, Cathie Wood seems to be very bullish on Zoom Communications. However, personally, I am not a fan. I would much rather invest into Microsoft. Meanwhile, while she has accumulated Zoom Video Communication shares, she's actually sold and unloaded shares of electric vehicle maker Tesla, ticker symbol TSLA, offloading around $19 million. Now, let me be clear here. She is not doing this because she has somehow lost her confidence in Tesla. Cathie Wood is a long-term bull on Tesla, and she gives Tesla as well as Elon Musk tons of positive publicity. On top of that, Cathie Wood has a 5-year time horizon where she believes Tesla could achieve a $2,000 price target. So the question remains, why would she sell if she believes the current share price, which is around $261 to $264, could surge to $2,000? Why would she sell right now? Well, the reason she sold is because Tesla is up dramatically. Because the TSLA stock price has surged around 112%, so Cathie Wood is practicing proper risk management and selling some of her shares at a very high price. However, this does not mean she is losing her overall bullishness on Tesla. She is waiting for Tesla to drop back down, and she's going to use this money that she has accumulated by selling shares to reinvest back into the company so she can buy more shares at a cheaper price using the profits that she just took by selling shares. So it's very genius of her to do that because not only is it proper risk management, but she also is increasing the total number of shares that she owns, meaning that once Tesla achieves that $2,000 price prediction by 2027 or 2028, this company would be worth so much more money to her. On top of that, she also sold off and liquidated 86,776 shares of Shopify, valued at around $5.6 million, while also buying and picking up a company that I like, which is Teladoc Health, ticker symbol TDOC. She bought approximately 142,000 shares, valued at $3.6 million. Now again, we need to understand that Cathie Wood and ARK Invest have a long-term time horizon of 5 years. So the company she is buying right now, regardless about what it does in the next 1 to 2 years, unless it surges, in which case she will take profits on those, she is waiting for these companies to grow into their overall valuations and become market leaders in their respected areas. But overall, Cathie Wood selling Tesla should not influence what other investors do to Tesla. She is literally just taking profits by practicing proper risk management because of the recent Tesla surge that we have seen in their overall share price, and therefore she is waiting for a pullback to reinvest those profits back into the same companies in which she took profits, which again is a very genius move in my personal opinion. So don't get all bent out of shape. She is still a huge Tesla bull, And whether or not you like Cathie Wood, you can at least give her props for identifying Tesla multiple years ago before anyone really knew what Tesla was. She was the foremost bull on this company, and she has made loads of money from Tesla, and she said they still have huge amounts of upside, especially once they achieve their fully autonomous vehicles. Now let's talk about another electric vehicle maker named Polestar, and we'll compare them to Tesla because remember, there are a lot of electric vehicle manufacturers out there, and we want to see how Tesla compares to them. The author of this insider article has driven both Tesla vehicles and Polestar vehicles, so now let him compare and contrast them for us. Honestly, I like the look of both Tesla and Polestar vehicles, just from an aesthetic standpoint. However, when we compare them as businesses, Tesla has become synonymous with electric vehicles. Tesla has proven that electric vehicles can be cool and that they are the new and up-and-coming thing, so now lots of other companies are trying to replicate Tesla's success. And one of those companies is Polestar, which is a Swedish brand that takes aim at Elon Musk and Tesla to create new, modern-looking, very innovative electric vehicles. So let's see how they compare, starting with Tesla. As you can see on screen here, we have a red Tesla Model X, and I personally really like the look of a lot of Tesla vehicles. Tesla has become synonymous with electric vehicles and electric cars because they are a market leader, and Tesla has multiple competitive advantages. For instance, they were essentially a first mover in this area. They have amazing brand awareness because Tesla is completely synonymous with electric vehicles even though they do many other things, and their technology is also extremely impressive. So what competitive edge does Polestar have when compared to Tesla? Again, on screen you can see the interior of Polestar, and honestly, I like the interiors of both of these vehicles. I think they are very sleek, minimalistic, and very innovative. Polestar only produces electric vehicles, and they actually spun out of Volvo back in 2017. Essentially, they are an electric vehicle startup which has the infrastructure and the support of a global automotive behemoth such as Volvo, meaning that they are leagues ahead of a lot of other electric vehicle startups because they already have factories, they are already producing electric vehicles, and their vehicles are tried, true, and tested. Polestar initially released their Polestar 1, which is a limited hybrid coupe. Then that led to the Polestar 2, which was essentially Polestar's main electric vehicle offering to the masses. And in 2022, Polestar sold around 51,500 vehicles worldwide, which doesn't sound very impressive at first. However, when compared to Lucid Motors and Rivian, they are leagues ahead of those other companies, and they're also trading for very cheap. Polestar right now is trading for around $4 per share, but again, this is not a buy recommendation from me. I just want to expose you to other electric vehicle companies besides Tesla, because as electric vehicles become the new norm, this is going to be a rising tide which lifts all boats, meaning that if electric vehicle companies can actually become profitable, they are also going to benefit from this electric vehicle surge. It's not like everyone's only going to be driving around Teslas. They're going to be using other electric vehicles as well. So I would really recommend you do your own research on all of these companies. Make sure you do your own due diligence and then make an investment decision for yourself. However, let's jump back to the Polestar 2, which is built in China. Polestar also has an SUV, which is set to be released at the end of 2023, which is going to be called, shocker here, the Polestar 3. And that will also be built over in China, followed by later being manufactured in the United States at a Volvo factory in South Carolina. This then leads us to the Polestar 4 and the Polestar 5. The Polestar 4 is a smaller SUV without a rear window. Literally, there is no rear window, which is quite odd, and the Polestar 5 has yet to be unveiled, so that is going to be a future catalyst for this company. However, clearly they are stealing from Tesla because Tesla was the first car maker to use big touchscreens and reject all of the other buttons, and Polestar clearly from the picture you see on screen is following suit on Tesla's interior design. The author of the article says that he likes how Polestar's electronics are Android-based and they use an Android-based operating system which came loaded with Google Maps from the factory. However, Tesla's system and their overall software inside is much more expansive because not only does Tesla come with navigation systems, but they also allow you to access the web, play games, and their own surveillance systems. So both of these brands are very tech heavy and tech savvy. However, it seems that Tesla has more of an offering in this particular regard. However, both of these companies provide regular software updates, and they also offer paid upgrades like increased acceleration and other software which can be accessed inside the vehicle. Now, on screen you can see Tesla's overall interior. This is going to be the Tesla Model Y that you see on screen. However, not everyone buys Tesla just for their interior. They're really buying Tesla for the technology and their overall range. Tesla sells some of the longest range electric vehicles on the market, and Polestar isn't too far behind. For instance, the Tesla Model 3 gets well over 300 miles on its longest range trim, and the 2023 Polestar 2 gets around 270 miles, while Polestar says that their 2024 model will go around 300 or a little above 300 miles, but in this particular regard, Tesla is still the winner. Another thing I would like to point out is Tesla's charging station network, something that Polestar doesn't really have, including Tesla's exclusive supercharging network, and this is a huge competitive advantage for Tesla as a company. Now, both Polestar and Tesla emphasize on performance and invite buyers to buy their more sportier, quicker models. So in the end, which one should you buy, not only as a stock, but also as a vehicle? Well, honestly, my money's gonna have to go to Tesla, and here's why. Let's go over the biggest reasons for my overall opinion. The Polestar 2 starts at around $48,400, while the Polestar 3 SUV starts around $85,000. Now, the good thing about both Tesla and Polestar is you can order these directly online, and there is extremely transparent pricing, which is very good when you're trying to buy a vehicle. However, there are cheaper Tesla models which go just for a little over $40,000 from the entry-level Model 3 to well over $100,000 for the super quick Model S Plaid. On top of that, Tesla also gets pricing breaks and EV tax credits that go up to $7,500, while Polestar cannot account for these EV tax credits, at least right now, meaning that Tesla not only has cheaper vehicles but more expensive vehicles, so it has essentially something for everyone, thus concluding that I think that Tesla is the better company here overall. But again, feel free to look into Polestar. Again, they are still a pretty solid electric vehicle company, and I would love to hear your thoughts down below. So with that being said, I would love to hear your price targets for TSLA's stock, what you think of Cathie Wood and her recent selling of Tesla shares, and if you've ever heard of Polestar. Now, if you made it all the way to the end of the video, don't forget to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, don't forget to become a member for as little as 99 cents, and with all that being said, I will see you in the next YT video.